Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, May the 3rd, 2013, and we'll be looking at the U.S. markets and a couple others. Typically on Friday, I go over all the major markets I track for you at PerfectStockAlert.com, give you an idea of what I see going into the week ahead. This time I'm going to do something a little bit different because most of the charts are telling us the same thing, so we're just going to analyze a few and kind of give you an overview of what we're seeing here and why it's important. Right now we've been stopped out of our short position as of today's activity. You can see a big move here on the Dow Jones Industrial Average gaining 142 points. Big move here, but there's really nothing here. It's another fake, and I'll show you guys why we know that in a moment. But the main thing I want to point out to your attention here is that this is not the first time we've seen this kind of activity where the market just continues to move higher and higher and higher, and people just finally give up on the short side and say, well, it doesn't matter what technicals say, it doesn't matter what fundamentals say, that we're just going to buy because it's just a great time to do so. The last time that I heard that was a couple years ago, back during the flash crash time period. Just before that, everyone was certain that technicals were broke, fundamentals were broke, only thing that mattered was price went up, so we're just going to keep buying. And then one day, all of a sudden, the market just did exactly what the technicals said it was going to do, and it completely evaporated. Everything that went up came back down. But it happened in a matter of 15 minutes. Why? What caused that? Well, we knew it was going to happen long before the flash crash term ever came about. We were warning that was exactly what was going to happen. We'd never seen it before. We just knew the chart was telling us that's what was going to happen. So what was it that was catching our attention? It was this. You go down here and you look at volume, and you can see that whenever, if you've been to our website at PerfectStockAlert.com, you know that we have a technical analysis school there that teaches you in video format all different kinds of concepts. And one of the major principles is volume analysis, confirming breakouts with volume. If you don't have that, then you have a problem. You have a fake breakout that's going to getting wiped out. And you see small versions and you see large versions. In this case here, you have this little sideways movement activity consolidation after a major move here, and then we break out and we do so on no volume whatsoever. So we just turn around and get it right back. Then we come over here and we do it again, breakout, again, a low volume. This red line right here is just average daily volume. Nothing here that's at that level is important. You have to really stand above that to really get any kind of attention going. Then you get that sell-off again because you had no volume behind the breakout. And then you come up here and you do it again. Now, we've just done the exact same thing. Where's that volume? It's, again, nowhere to be found. Any breakout that's on low volume is a false breakout. And that led us to the flash crash analysis before, when we saw that the market just kept moving higher and higher and higher on weaker and weaker volume. It didn't matter that price was just going higher. If there's no volume behind the move, when eventually someone says sell, there's no one there to buy it. So it just quickly just turns around and says, well, in one day, in a matter of 15 minutes, there's 1,000 points gone. And everyone's going, oh, what happened to my gains? It's complete BS. And so what I'm trying to warn people about is you're walking into a trap. There's no other way to say that as to warn you in that form. Like I said when I first started talking about this, I probably can't convince you. However, you're going to see a major, massive crash. Please protect yourself. If you're going to be long, do so with a very small amount of money. Risk very little because you are going to be burned. Looking now at the French CAC 40 index, again, this chart we talked about before, and you see this massive move up here, stopping us out from our previous call at the top here, where we got stopped out because we didn't, we put a stop on off the high, and we've just taken out the high, so therefore the stop is there. We've tried to find a place to enter again. That's what we're trying to do, is we have this massive move here when we know it's going to eventually peak. And so we're looking for some kind of a shooting star signal, but we need confirmation. In this case here, we don't get it the next day. She continues to move higher. That's fine. Let that continue to form, and then you'll get some kind of topping signal, and we'll take that as an entry opportunity again. The main thing here is to show you that this chart is in fact breaking down. I know if you look at it, you say, well, wait a minute, we have a higher close here than we had over here. How is this chart breaking down? Well, quite simply, it's the low point. So if you look at the low point here and the lower low here, you're starting to find that you're increasing volatility, bigger moves in one direction as well as in the other direction is coming. So it's important that you take note of that, and also take note of the fact that this is your now new major support line right now here. Before you had a support here, you bounced off it, came down, bounced off it again, and then you made this distance here. Now you've pulled back down, broke that support, therefore lowering support to this level, and now you've gone up here and taken it out higher. Is the chart improved here? No way. This chart is now worse than it was back here. So the idea that, no, it's okay, time to buy it, whatever happened over here is over, now we're getting on our way. No. This chart is telling you that it's now worse than it used to be. Looking now at the German DAX composite, and this is of course the strongest in the Eurozone area, Germany, but again their unemployment rates and their GDP numbers and all over Europe is actually falling apart there. So regardless of what they're telling you in the US, even though we're seeing signs of weakening, it doesn't really matter what they tell you. And so the fact that you had better employment numbers than you had in the previous, that doesn't really mean anything, because the real problem, the thing that's going to end up pulling us down, is going to be Europe. And so that's what I was talking about yesterday, and what I'm still talking about. This is going to be the major problem. Again, the same overall condition. Higher high from this point to this point, great, but lower low from this point to this point. So again, you had this support line here, and everybody's happy, bouncing around this little zone. We come up here, we get overextended, and we come down here to test this low, just to bounce off of it again, and then eventually go higher, because that's how bulls do it. We do this kind of a number, that would be fine. But no, what happened was we came down here and broke right through it. Nothing here, it was support. So now we rally up here again. Have we improved the chart? No, we've made the chart worse, more volatile, worse than it used to be. And so again, in this case here, I don't see any reason to be a buyer. I would just look for a sell opportunity. And I think what you're basically going to get, talk about this on some other charts this week, this is the measured move. So you've got this, the first leg, measure that distance out. This is the halfway point, and then you just add that again about how high you expect price to go. You're about there, maybe a day or two more just for the rollover effect like this, and then you roll back over. That's it. That's all I can measure out and say. Best case scenario, that's what you have to the upside. Again, not a reason to buy just because you've got this breakout scenario here. Your low point down here, never been tested. And again, you will test it, which means you will erase everything that you put in here, you will erase. Taking a look now at gold, this is probably the most important chart when you're looking at the overall economy. And if you're seeing a major depression kind of thing, or a bearish kind of a market, then you're going to see price of commodities deflating basically. And that's what we're seeing here with the price of gold. It's been in a downtrend for a successful amount of time here. We've had lower series of highs, lower series of lows. There's nothing here to indicate that this is a bullish condition, that we're in any kind of a bull market, anything like that. Even the ultimate oscillator, whenever you find the ultimate oscillator hitting that 70 line up here, then you get above that, you get those overbought conditions. A lot of times when you're in a bear market, you won't even do that. What will happen instead is you'll come up and hit the 60 line just below that point, and you'll bounce off of it. Again, this is also telling you very bearish market forming right here. Look back in the 2008 time period, you'll see the exact same condition. You'll see the price of gold falling about 50% from the highs there. So it's again something to point out, that you're not seeing confirmation in anything other than the price of going higher and your market's falling out from below you basically, and it's forming basically a bubble. So you have all your fundamentals, which are your supporting your economics, are falling away from you on Europe side as well as the US, but more so on Europe, which is going to be the main problem. So when that pulls away further and further, you just get more overbought, both in how high the prices continues to go, but also how much lower the fundamentals continue to track. So you're just making this massive bubble that will pop and will burn anyone who's caught in its wake. So it's very important that at some point, I keep hearing people talk about, well, it's a flight to safety. Everyone's going to the U.S. to buy something that's quality versus Europe, or versus the debt bubble that we have going on out there in the bond market and stuff like that. So I understand that concept, but at some point, where that flight to safety gets overbought, right? You're finding these great investment opportunities that are safer, that are paying a better yield or whatever than your bond market, and then eventually so much money goes into it, it's no longer safe. It's now overbought. The same concept happened with people in their concept in real estate. Real estate's always going to be the best investment. This is where we've got to go put our money. The market always goes up in real estate. Guess what? It doesn't, and eventually you got burned. I'm basically trying to warn you guys, there's a massive bubble forming here. It's going to pop, and it's going to burn a lot of people. What I've talked about before, when you saw this massive move in gold lower here, and I warned you that this was the start. It was a first leg to the downside right here, indicating this downward leg. This is a measured move in the middle section here. It's just a fake rally here that fools gold, if you will. And then she turns around and she duplicates this right here from this 15 level here down here. All this will be duplicated, one from the breakout point right here. So we'll measure this out and then say, all right, this level right here completed again down there. You've got so much further to fall in gold, not even real, that the distance we're going to be falling here. And again, that correlates poorly for the markets. Looking now at the NASDAQ, and this one is very, very telling. Again, we've been stopped out of this on the short side. We're looking for a re-entry opportunity because we recognize this is not a sustainable condition. Lower series of lows continues to take out the previous support lines, and we're getting overextended in every case. Every single one of these moves here increases the momentum and the volatility, if you will, and every single time it takes out a low. So if you move higher this way, what do you think is going to happen now? You're going to end up turning around and taking out that low again. So you're looking at this situation going, oh, we're improving this market. No, you're not improving. You're getting worse and worse. The condition, again, if you look at the high close here and the higher close here, you can see you're trending up at the corresponding time period on the ultimate oscillator. This high point here, lower high, lower high. It's telling you it's bearish divergence, an unsustainable rally, just like we're talking about with the situation we had on Dow Jones Industrial Average, where it was breaking out in an unsustainable fashion with low volume. Seeing the exact same thing here in the NASDAQ. Today's activity actually happened at the open. You didn't get anything happening before, and it just opened up. Oh, there we are. And then the people who don't know any better went out there and bought because market was up. That must be a good thing, right? You're buying a top. One of the other elements that I've talked about in the past, and I'll always bring to your attention whenever I see it developing here, is the condition where you have massive amounts of gaps forming. You have one here, one here, one here, and another large one here. That's 4 in this little short time period right here, in less than 2 weeks time period. You've had 4 massive gaps here. These get filled. There's low volume gaps to the upside. They eventually turn around and you come back down and you fill them all. So any of this buying, people are saying, aha, look, we're making all this money. You're not making anything until you actually book it. So eventually someone's going to get caught with their pants down around their ankles because this thing's going to fall apart real quick. Also, there's several more gaps back here that we've already gone through and not showing anymore back here. These have already been filled. We talked about that when it happened, and we come up here and we were making other ones as well, and then came down here and started filling these gaps. That's just what happens. All right, now we come up here and we've made more. What do you think is going to happen? Well, we're going to fill them. Why is this so important to me when you see multiple gaps? Let's go back to 2007 and look at the same chart, the NASDAQ. Hey, this is the chart of the NASDAQ going back to 2007 time period right here. The major peak before the 2008 stock market crash, this 2008 time period right here. You see December right here. And the main thing to point out, again, note that you had this previous little bullish condition going on, and all of a sudden we just take out the lows. That's very, very telling. We come down here, we close below the 200 period moving average, getting sell signals at the 200 period moving average, resistance at the 50 point. All these things, if you've been following us for any amount of time, you know all of this stuff has already happened. Then we get a massive, miraculous bounce, and it does some neat little interesting tricks. Number one, massive gap down here, another one here, another one here, another one here. There's 4 right there. Then it comes up here and does some more. Look at the measured move distance here, a little consolidation and measured move again. Takes out the previous high. Wow, that's impressive as well. Again, note that what's happened here. All of this has already happened in your market chart. This has already happened when you've taken out the previous lows. You've already found resistance at the 50-day moving average, which warns of a change in the trend you're starting to. Before, when you're in a bullish market, you find support at the 50-period moving. When you start to change, you start to find resistance there, not support. Then you come up here and you make a new high. Oh, that's really impressive. Convincing people that, no, wait, we're really not over. We're going to go higher. This is going to be great. And we get all these massive little gaps that I warned when that happened. This was not sustainable. This would all be erased. What happened? Well, you remember 2008. Again, note the high points here, high point here, forming like this. Same time period, high point here, lower high here, forming like that. Warning, unsustainable. I'm just a technical guy right now, showing you technical stuff. This stuff repeats again and again and again. You may not like my opinion, you may disagree with my opinion, but the reality is if you're not looking at technicals and you're not looking at fundamentals, you're not looking. So what I'm trying to warn you about right now is that you've got a massive crash coming, and if you don't get on your game, you're going to get caught and be one of the people at the end saying, man, I wish I'd listened to you. And trust me, I've heard it many, many times. Okay, that was basically me stating my case from a technical perspective, showing you what the charts are telling me again and again, that we are in an unsustainable condition. We're about to snap and have a massive move to the downside. Showing you that going around European charts, going around Asia, going around US, we're just seeing weakness again and again and again. And that's my perspective. That's what I do. I show you the technical side of it. I show you some fundamentals along the way as well. I teach the stuff here at PerfectStockAlert.com, a free website, so you can just check it out for yourself and learn what I know. If you don't appreciate the opinion, that's fine. That's cool. I just give it to you. It's free. I don't charge for it or anything of that nature. So that's my thesis. If you have your own, I'd love to hear it. I don't want to hear you're wrong. Show me why. Show me a video, show me a chart, show me a fundamental, show me something that proves you're right. Remembering again that if you're pointing to fundamentals of the US, that's not going to help you much because the problem is Europe. So show me the fundamentals in Europe which are improving, because I haven't seen it. All I see is the same countries turn around and getting worse and worse and worse, and then new countries coming out that we didn't have a couple years ago. So the problem is getting worse rather than better. And that right there is the most important element to your fundamental structure, is that once that falls away, what happens to the U.S. market? We start to follow. That's the same thing that happened in 1929. And again, that's my take on it, but it's the best I can come up with, okay? God bless, take care, enjoy your weekend, and I will see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.